you cannot bet against America. I think we've been proven that time and time again. All of the innovations are happening in America, and claiming that even the most positive AI scenario will lead to a very severe recession. I think just overall the concept of asset ownership will be here. Just this concept will stay, no matter whether we have AGI in a couple of years or in 10 years, whatever. The second, like government states, one, there's a limit on land, and there's some form of oppression, especially in America. I think that's a great signal that the system is failing. But I also follow closely the concept how AI and crypto can work together, because AI essentially is a very authoritarian concept, but crypto is very libertarian. And if you understand the risk, you accept that there's no risk.
A lot of people in 2026 are asking the same question. Where do you actually put money now if you want both growth and protection? Stocks, bonds, crypto, private bets, systematic strategies. There are more options than ever and also more noise than ever. So today I want to understand how a smart wealthy investor should think in this environment. And to help us unpack that, I'm joined by George Narinyan, founder of ValueSense, an investment research platform that combines intrinsic valuation tools, stock research, market data, investor relations resources, and systematic strategy products for serious investors. George, great to have you here. How are you doing?
Lisa, nice being with you. I mean, we planned it for quite some time, and finally we got the chance to talk to each other.
Yes. How are you doing? How is your company doing? Any news?
Yeah, I mean, currently the markets are in the turmoil. I mean, it's the run situation, lots of stuff with AI and whatnot. And like our platform, so far so good. I mean, people want to invest intelligently. That's why they use ValueSense as an analytics platform. If they want to have uncorrelated returns, steady returns, they use our quantitative strategy. And so just yesterday, I also closed another investor for 1.5 million. I
Great.
mean, very impressive.
Congratulations.
Yeah, thank you, thank you. I mean, it's just the beginnings, and yeah, happy to share the progress, the insights along the way, and share it with your audience.
We will talk about FX strategy later, but I want to start with like investment environment. So if we look at 2026, what kind of market environment are we actually in? What do you think?
I think the more we are in 2026, more conversations we have about the potential bubble. Does AI provide so much economic benefit to justify the cost? And we've had the Trini research paper claiming that even the most positive AI scenario will lead to a very severe recession. We got the experts that experienced 2008 financial crisis just very closely. They are also claiming that similar situation, similar concepts underline the current like bubbly situation. I mean, it is the number one question. It will also be shown in upcoming earnings for Q1 also. Like we'll get the results in April, and we'll see how Oracle is doing with that situation, how big tech, whether they expand their debt. And if yes, then it's a signal we're coming into this like bubbly situation. Also, we got very interesting stocks in energy. So we understand that yeah, AI supply chain is real, and we better look into the constraints of the AI, and lots of hedge funds also profit from that. We can just copy their strategy, like invest in energy stocks, invest in the manufacturers of AI equipment. So yeah, I mean the situation is really bubbly. All of the stocks are in drawdowns. S&P also is in the drawdown. We know that Trump is monitoring the situation very closely, but I mean, I'm doing fine myself, so and my investors as well. I just like being in the situation when lots of stuff going, a lot of noise, but slow and steady returns no matter what.
What do you think about stocks? Are they still attractive in 2026, or maybe we should look at some different stuff?
I think stocks will always be attractive. I mean, all of the charts. My most favorite chart is like S&P growth from 1900, something like that. And there are dots that represent every single situation where you could have, like logically, you should have solved something like Cuba crisis, 2008 financial crisis, all of those situations. But S&P 500 is growing. It will grow because the underlying philosophy is very sound um, and you cannot bet against America. I think we've been proven that time and time again. All of the innovations are happening in America, and it's just very illogical to not be invested in stocks every single point in time. But currently, one thing that I'm researching and putting my like effort together with my team, just we'd love to understand how people predicted different crises, such as like 2008. We got more and more books published that try to compare current situation with 2008, and it's very interesting to analyze. So I'm putting a lot of effort to analyze how it can be predicted, what are the metrics potentially. Some logic suggests that it can be predicted, but of course, it's very hard, and no one knows. Essentially, just one trigger that's been pulled, and all the dominoes fall afterwards. Very interesting, but long-term strategy, stats prove it. The more like the longer your time horizon, the higher the chance you'll be positive. So I think being invested in stocks is just the most logical thing you can do every single time.
I think nowadays it's so hard to think long term because
Yeah,
so many things happen. I don't know how to think long term now. How
yeah,
can you how can you predict what can be like in 5, in 10 years?
that's a good question. But I think just overall the concept of asset ownership will be here. Just this concept will stay no matter whether we have AGI in a couple of years or in 10 years, whatever. I think asset ownership will become even more important. Let's say, yeah, AI apocalypse, but you still have the land in Wyoming or or the farm in other places. So whether it's a physical asset or just a piece of a publicly traded company, I think yeah, I think it still makes sense.
But speaking about the land, you never know if some government can just say that people can have only one land, for example, and if you have two lands, then um, I don't know what you would do. So some government decisions we can predict, and it can also affect us. So we never know.
Yep, yep, yep. I think it's all interconnected, and I appreciate the chance to like even think about it alongside our conversation. But I think the second like government states one, there's a limit on land, and um, there's some form of oppression, especially in America. I think that's a great signal that the system is failing. Or I understand the restrictions, let's say on Bill Gates or like big assets owners that can actually buy out the whole land in America, and that's their strategy right now. We just need to follow the money and follow their actions, not just follow which words they're speaking. But let's say I'm just a guy who's just an up and coming guy who's just trying to do things. and I have a limit, but they don't, or they're of the rules. I mean, that's so messed up.
You speak a lot about logic. What percentage of success is logical in investment, and what percentage is like instinct or I don't know, maybe luck?
Yeah. The more I analyze like top investors, I think they spend the vast majority of time building their philosophy, investing philosophy, and the foundations, and then the behavior is automatic. That's happened with Buffett. Like lots of time spent polishing his approach, and he went through several phases of evolution. How he sees investing, from Ben Graham to a partnership with Charlie Munger, and just one meeting with one person, Charlie Munger, he completely changed the way Warren Buffett invests. And I think more time is spent on philosophy. It's done through logic as well, pursuing first principles, pursuing like like the fundamental basis of how you act, similar to religion. Like, and investing for some people is a form of religion as well. Like people go to Omaha in Nebraska every single year, and it's just a religious cult. People just call it as it is. They go to hear what Warren Buffett is saying, and probably it can affect their lives, probably can affect their investing philosophy. I think it's a very great example and showcase of how we should act as well, because lots of retail investors, Robinhood investors, they didn't care about the basics, the foundations. They just act here and now, and the outcomes usually prove that it's not the best strategy. Okay, you may have a luck with options today, maybe consistently throughout a month, even a quarter, let's say a year. But long term, like the way Buffett invests 60 years, it's impossible without those foundations and first principles. Um, yeah, that's how I see it. So to your question, how much time? I think a lot of time in the beginning, and then the behavior is so automatic that you don't even think about it. It's just like it's just second nature to how you invest.
What do you think? How should a wealthy person think about dividing capital between growth, protection, and liquidity now?
That's interesting. I think that's individual for everybody. I don't like the concept of just one advice that fits all. I'm mostly interested in like two categories of people. I like to analyze and follow the behavior of top investors, just to analyze how they move, which actions they make, what can it say about the future. And also the guys like me, like my friends, our peer group, that we got our first capital, we try to invest it, we try to protect it. We got the monthly income that we want to invest, like how we should act, how we should go further. So strategy always been for guys like us, more growth. Risk is basically eliminated if you understand the risk and accept it. That's the idea of Howard Marks, and he completely rearranged my view of risk. That's very powerful concept, that if you understand the risk, you accept that there's no risk at all. So yeah, we see it like that. So, but it's not that, let's say, long Bitcoin. No, a very deep analysis in all the stocks for quite some time. Google was the contrarian growth stock idea, but if you understand the company, and you understand that AI is not going to kill it, and probably Google is going to take advantage of this whole AI boom, then there was no risk, and it was a very easy 100% return last year. Currently, the stock is in a bit of a drawdown compared to 52-week highs, but still. So yeah, but also what I see And actually, funny enough, in Epstein files, I mean, we hit another bingo, like any conversation hits the Epstein file. It was interesting that he also discussed some sort of FX strategy that gives returns every single month, no matter what, just uncorrelated returns. Doesn't matter what's happening in the markets. And it actually also opened my eyes to, um, I don't want to draw any comparisons, me and Epstein, of course not, but it's just the way
Why
big
not?
money. No, no,
Think big.
definitely not. Definitely not the smoothies. Yeah, we only drink vegetable smoothies or fruit ones, not the babies. Uh, but just very interesting how big capital moves. They want the steady returns. They want to have some sort of money button that they can push, and so it doesn't matter what's happening because those elites they trigger situations on the market and in societies, but at the same time they want to have the downside protection of their investments. So just a form of an instrument that gives them returns no matter what is happening on the market is very powerful. And currently, that's what I built. That's what I actually stand on that. It's my like my investing philosophy as well. That to have an instrument, to have a tool like that that was previously available only to elites, or some sort of medallion fund from Renaissance Technologies run by Jim Simons, late Jim Simons, rest in peace. Um, it was unavailable to just simple guys like us. But currently, like with Value Sense, Value Quants, we opened the gate. I think it's important, and that's how my peer group invests as well.
You mentioned open AI and AI boom and Google. How not to be confused when some boom happens and you want to invest in some booming companies and you think that it is the future, but maybe it's not. Maybe some stable companies like I don't know, Google, they still will work, or maybe not. So how not to be
Hmm.
confused?
That's interesting. I always dislike the idea of investing in trends. Like when you call a trend, when you call something like by its name, it's already priced in. All the attention's drawn there, and you just become the liquidity for all those people who just spotted the opportunity earlier. People in Silicon Valley knew about OpenAI long before the general public, so they were ready for they understood the supply chain, the value creation, they understood all the constraints, they knew which companies could profit. So and it's like the curve, right? People who are early adopters and laggards. So when a trend is named, I think that's laggards come into play, and they just become the liquidity for big players, big investors. So I'm usually opposed to, like, let's say, oh, that's a trend, ESG investing. Let's invest in companies with high ESG score. I don't understand why. And
So you don't do that. You don't invest in trends.
if we just analyze the company according to simple fundamental investing analysis, we pull the P&L cash flows. I mean, that's a horrible company. It's just a matter of whether you believe the future, uh, how how the future will look like. I mean, AGI. The goal is to have an AGI, and uh, so the way Sam and other executives see it, we just we are pursuing it for the name of AGI, but general public was not given an answer to what's going to happen like post AGI, whether how economic benefits will be distributed. Will everybody have a place in this world, or which societal changes will happen? And I mean, that scares me a bit. Well, you can be an investor, but uh, I'd love to be an investor, but only if I am given an answer to those questions, like what's going to happen. Other than that, just it's just a trend investing. If you like follow Warren Buffett principles, you're never gonna invest in company like that. So yeah, I think here's an answer.
And what about crypto? What role does crypto play in 2026?
Wow, I think yeah, everybody was a bit, as always, a bit disappointed with Trump, how he's gonna move with crypto. I mean, there was a crypto bull run during his presidency because of the crypto reserve and lots of initiatives. I mean, they're moving slow, and market overreacted like a year and a half ago. Currently, a lot of attention is drawn to stablecoins. I mean, there was an IPO of Circle. Tether is planning an IPO as well, if I'm not mistaken. So stablecoins are a big thing. That's the reason why PayPal is actually falling and falling. I mean, I like the concept like when the company falls 90%, it means that it first fell 80% and then another half. So yeah, so PayPal is like a falling knife just because of the trend of stablecoins. Um, Mastercard and Visa will probably understand their market positioning and um, will be fine, but PayPal is not. Overall, if we're talking about Bitcoin, it has a very solid philosophical ground. The concept of Bitcoin and crypto was first actually discovered by Austrian economists back in early 20th century. So I'm fine with it because long term, it's going to be fine because of the US debt, because of the abominable spending. Crypto is the savior. But I also follow closely the concept how AI and crypto can work together, because AI essentially is a very authoritarian concept, but crypto is very libertarian, and
Hmm.
lots of things can be done at the intersection, but this combination is moving very slowly. So I think it can be a big trend, but not so much development so far.
Okay. What do you think? Are there any red flags that wealthy people should follow?
Yeah. As always, if you look at financial statements and you just see a bad picture, you see off balance sheet items happening right now in big tech. I think that's a huge red flag. Um, yes, so that's why Meta, despite its high quality, is a bit, well, it's going down, like, because investors are starting to ask questions. I mean, what are those um, off balance sheet items that you actually don't disclose, and so that should be part of the balance sheet? So that's a bit misleading, and that's a common thing in tech companies right now, especially related to AI. That's first thing. Also, the behavior of management, and I think that was the last words of Warren Buffett. In his last annual shareholder letter, he actually meant Elon Musk, but this part I don't agree with. But overall, he said, invest in companies, invest in wonderful companies run by outstanding management, and the rest and the time will take care of itself. So the quality of the management should be taken into the account. And currently, some of the companies run horribly, and whether there's a change in management or not, I think it can be a trigger for potential investment. But I think, yeah, those two, financial analysis, like according to the rules, and all the red flags are known to people. We just simply ignore them because we want to pursue the trend. And also the analysis of management, how they can create value, how they see the situation. I was actually trying to keep it to myself, but I think uh, some sort of value unlock can happen to Apple if they just rethink their management right now. I mean, Google, Microsoft, even Amazon, also Meta, they were great, understanding their place in the ecosystem, how they navigate the AI infrastructure cost, but Apple is not doing anything. And
True.
people just, yeah, I mean, that's very surprising. And I think if Steve Jobs was alive right now, I think the situation would have been completely different.
It would be better, I think, not only with stocks and all this stuff, but with technology also, because
Yeah,
he was such a great marketer and I don't know, I think inventor even. So
yeah.
let's talk about strategies. Where do you think systematic strategies fit into serious portfolio?
I think definitely some percentage of the portfolio. I like depending on the level of investor sophistication. Like 10 to 20% is fine. Some of our investors, they just this percentage varies huge time. But I think, yeah, the sweet spot is like 15, 20%. Have these uncorrelated returns, and also within um, uncorrelated returns, there are also like different varieties. Some people invest in sports team, and they also provide uncorrelated returns. But like automated strategies, yeah. But if I was given the chance to invest in Medallion to have 65% annual return, even with 44% success fee structure, I'd probably still do it because of the reputation and skin in the game that those brilliant people have. We want to we want to recreate something like that. We've also gathered a very smart group of people that together with me delivered a very nice strategy. So far we have close to 10 million under connected assets, and still growing. And yeah, we provide very solid returns. This March, we are up 3.5%, even like Iran, doesn't matter, 3.5% annual return, monthly return so far. And it's going to be even better. The month is not over. So, yeah.
Can you tell more about your FX strategy? What is it?
Yep. So I I was fascinated and was raised by two figures in investing, Warren Buffett and Jim Simons. And it's usually said that you follow Warren Buffett if you are an ordinary guy who just reads, who just analyze. But you follow Jim Simons if you know math and you're capable of doing super great things. So I could do both, but for Jim Simons type of investing, I needed support. And as the right moment appeared, I gathered a group of math guys, and we just applied the concepts of sound waves to very low volatility assets, such as Forex, Euro USD, least volatile asset there is. And just applying the concepts from physics and statistics, we just pulled a really nice strategy that just understands the change of cycle and changes cycle for Euro USD, but it works in a way that it predicts the change of cycle in the sound wave. So it's like going like this, and we clearly understand where there will be a change of trend. And yeah, the strategy is the thing that we pursued in the strategy, not simply the returns, but the sustainability of the strategy, how it went through major crisis, how it felt, just how it would it crumble under pressure or not, and it didn't in the past, like in the back tests. But of course, the back tests are just the the statistics output, but we needed the real life data. So we went through Maduro crisis with Colombia in Venezuela and currently in Iran. And I mean, those two were very huge, serious situations in the world. We everything went perfect and smooth. So yeah, so far so good.
Can you tell more about how this strategy make decisions? Why is it so powerful?
Yeah, everything's done automatically, so we don't make any, so no human in the loop, which is nice. Also, another thing which is nice, no AI, no all of those fancy schmancy BS. So pure cold-blooded statistics applied from physics. So that's all we needed. That's all we asked for. And we don't chase trends. We don't need to put AI just to sell it more or whatever. The thing works like this, and it should be like that's how it should be done. So when I see AI like stock strategy powered by AI, I'm confused like how or just yeah, that's very bizarre. Um, what else to say? And yeah, as I mentioned, it just tells us the change of cycle, and it gives you the long or short decision and puts it automatically and trades in a way that so there's like a price and you just put it under the so-called frequency of a sound wave. So whether it just breaks one of the ceilings, here's your profit. Um, and if it hits one ceiling, it hits the profit. It just then corrects the frequency and just moves on. So that's how we can generate 3, 4, even 5% per month without any balance drawdowns. And we are proud of this work.
If I say it sounds too good to be true, what will be your answer?
That's how it works, but that's not the understand how it looks on paper. Too good to be true, but not the first time it happens on the market. Like Jim Simons also in the beginning, it was too good to be true. He pushed with his own capital, with the capital of his friends and family. So that's how we're doing. It's just the beginnings of a very big and very meaningful story that I'm trying to build. And yeah, currently I'm just not going with the microphone just to attract all the capital in the world. Just seed by seed, we're growing. And yeah, hopefully one day it will be another medallion, another. I'll become one of those top legendary investors who can also share
I'm sure
his
you will
philosophy.
be.
I appreciate it. I appreciate it. So that's the goal. If that's not the goal, then why do anything? Why pursue anything in life? So just trying to do great work, just trying to push it to the limits, polish my own philosophy, um, and yeah, just do great things with great people.
So, if any of great people want to be part of your FX strategy, what should they do?
Just hit me up on LinkedIn. I'm open for conversations there. Also, happy to talk to any brilliant people in math who are in math field or physics, and also all great entrepreneurs who can share their stories, share their philosophy. I'm open for great discussions for great with great people, and if some people are interested to access this strategy, um, happy to. We provide the guarantee that we actually don't accept the capital. Surprisingly enough, we don't accept the capital ourselves. We put the capital in all the capital is stored in the brokerage account of an investor, and we just connect our strategy with the virtual dedicated server. So, like that's, I think, I believe Jim Simons would have done even that in the past if if he had the opportunity to do it like this. So yeah, we provide all the guarantees and not the guarantees, but more investor-friendly terms, and just grow our strategy. Yeah.
Any final advice to investors in 2026?
Don't forget about life. Investing, life is not only about investing. There are great things happening right now. Investing is just an instrument to obtain financial freedom. It's not the means, it's just not the end result, right? It's just a tool. Financial freedom is first. Investing is just a tool to do it. The biggest psyop that we have right now is that the world is purely materialistic and we should just invest, we should focus on money, capital, finance. That's not true. We should draw philosophical conclusions from following the money, watching closely how people invest. But the world is bigger than that. And yeah, I think it's a good point to end.
Thank you so much. It was a great conversation with a great person.
I appreciate it, Alyssa. Thank you so much.
Thank you. See you soon. What makes investing difficult in 2026 is not a lack of options, it's the overload of narratives. So the real edge is not just finding opportunity, but knowing how to think clearly about risk, liquidity, and where each idea belongs inside a broader portfolio. Thank you for watching me. See you next time and follow for more.